The market letters of Pure Rating offer you access to fundamental analysis of thousands of companies traded globally on the stock exchanges, based on the theory and methodology of value investing. So now even you have the same tools and the same access to the same information in order to successfully grow your money trading in the markets and investing in valuable stocks that are underpriced the same way that star investors like Warren Buffett have been doing for years and years. So our methodology actually identifies companies that are currently trading in the market at undervalued prices in relation to their fundamental analysis on the value investing methodology. Now, our analysis is actually run on the different composite members of the various indices. For example, the Nasdaq, the S&P 500, the Dow Jones, or even foreign indices like the German DAX or the Japanese Nikkei. So you can actually get any analysis run on any of these companies globally via our easy-to-access market newsletter and service. So in the case of the Dow Jones, for example, you have access to 30 different Dow Jones members' fundamental analysis reports, or if you subscribe to the S&P 500, you have easy access to 500 individual analysis reports. Now, if you would rather have an analysis on a certain sector or a certain industry, then you can purchase that market newsletter and actually have the fundamental analysis of your given industry of choice sent to you or easily accessed via a web, pad, iPad or iPhone application. Each market letter actually begins with a legend. Now here you will be shown how you actually utilize and read the information given in the letter. Now, right after the legend, you will actually find the index, the analysis of the different components of your market letter that you subscribe to. Now, this index already contains a ranking because the best of the best companies are at the top of the index, followed by the lesser worth investment opportunities. On the left-hand side, you see the company's name, followed by the stock symbol. Now you see the 5 most important fundamental ratios here with the numbers 1, 2, 3, 4, and 5. Now here we actually run an analysis of each individual ratio of the past 10, 5, 3 years, and the last year. Now the first ratio is the return on invested capital ratio, followed by number 2, the earnings per share, followed by revenues. Then we run an analysis on the free cash flow, and last but not least, we have the book value per share analyzed. Now we use a simple easy on the eye traffic light system with green, orange, and red. This way it's very easy and convenient and quick for you to see if a potential investment for you in any given company is promising or not. Anytime any of our ratios growth rates over the past 10, 5, 3, 2, or 1 years is above 10%, the field actually pops up or is depicted as dark green. Do we find a growth rate in the past of between 5 to 10%, we have the color orange. And do we have a growth rate of below 5%, then we actually have a red field depicted. Now, based on the value investing methodology, we actually prefer to see nothing but dark green fields in any given row underneath any given ratio for a company. So you see how easy it is with our market letter to identify if a company is fundamentally sound and offers you an opportunity to make money. Now, right behind the column number 5, you see LTD, which stands for long-term debt. Now, if that field is actually dark green, it means that the long-term debt of the company could be paid off with the free flat cash flow generated by the company in the past 3 years. Should we here see the color orange, then the company would need 3 to 4 years worth of free cash flow in order to service its long-term debt. And do we actually see a red field, then it would take more than 4 years worth of free cash flow in order to service the debt. So less optimal. Now we actually see in the next column today's market price, where the stock trades in the market, and then followed the so-called margin of safety price for 5 years and for 10 years. Now, these are 5 years projected price and 10 years projected price going forward. So that actually means that based on today's fundamental analysis, in 5 years' time, the actual stock price of that company, in our example, so here in 5 years, $526, and in 10 years, $1,658. Now, the theory of the margin of safety actually is given as 50% by Graham's value investing approach. So in simple terms, you're buying a dollar for 50 cents. So that actually leads us to the question, is today's traded stock market price above or below the margin of safety? And here again, we are using our 3 colors. So dark green, light green, and red. So in our example, $405 means that today's stock price is below both the 5-year as well as the 10-year margin of safety prices. Now, if we see the light green field, it actually means that today's market price is below only the 10-year margin of safety price. Now, if today's stock price actually trades above both the 5-year and the 10-year margin of safety prices, then based on the fundamental analysis investment approach, today's stock price is not attractive for us and the market is overvaluing, in compared to the fundamental ratios of the company, the firm's prospect. And we see the warning signal red, meaning please keep your money in your pocket. So in our index example right here, have a look at the second stock from the top down. We see green across the board, including today's stock price. And here we actually have to take a serious look at that company in more detail, because it may offer us a fantastic opportunity to make money with our money invested. If we have a look at the symbol above it, which is a light green, that's also worth a long-term investment. So we want to take a closer look at the company here as well. But please, 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 let's stay away from those stocks that are actually depicted in red. Because here, based on the fundamental approach, it is not worth our time or our money spent on these investment opportunities. But you could put, if you see green across the board in the fundamental ratios, a stock symbol like that on your watch list and revisit in a market downturn in order to then buy these fundamentally sound companies at the right price, given the margin of safety. So based on the index and our analysis run, we actually put together portfolios. In the first example, it was a portfolio based on investments in US stocks. In the year 2011, you can see that the portfolio performed above 11%. Now compare that to the Dow Jones, which in 2011 actually only increased 6.35%. And the S&P actually generated 4.4% in 2011. Now, year to date, from inception until May 2012, the portfolio actually generated 39.45%, versus Dow, 15.59% increase, and the S&P 16.72%. So clearly, our portfolio outperformed the market since inception. Now, we started another US-based portfolio in January of 2012, and we generated 21.73% versus the Dow, 7.11%, And the SPOOs, that's actually what the floor traders call the S&P 500, increased by 10% that year. And now in the pure index or ratio market ladder, we focus on those stocks that have the best, focus on companies that have the best ratio of today's stock price versus the 5-year and 10-year margin of safety prices. So out of thousands and thousands of companies, here you have an index of the best ratioed companies. Or in other words, the pure ratio index offers you those companies where you have the highest expectation based on fundamental analysis for future performance. So in this portfolio that we started in 2011, we generated slightly more than 9% that year versus the Dow at 6.35% and the S&P at 4.42%. So from September 11 until May 2012, we generated 38.32%, a significant outperformance versus the Dow at 15.6% roughly and the S&P at 16.7%. Now in 2012, we initiated another portfolio based on the Pure Rating Index composite members. And from inception until May 2012, we generated 27.5% versus the Dow's 7% and the S&P's 10%. Now compare that to today's money market rates of roughly 1% for your cash in the bank. So you see that with these easy tools of our market newsletters, which are based on the fundamental analysis of the value investing methodology, you have an easy way to outperform the markets and have a clear opportunity to generate wealth for yourself and for your family. Now, this does not exclude, of course, the rules of behavioral finance and the discipline of using stop losses are still of utmost importance to your investment strategy. Now, we'd love for you to actually surf over to our website, www.purerating.com, for further explanation of what you've seen here so far, our detailed offers, as well as make note of our easy-to-use and easily downloadable iPhone and iPad app that will offer you access to your market ladders on the go, anytime, anywhere you are. All the best while investing. Happy hunting. Thank you for your time.